Good evening, I'm Giuseppe Basile. I'm the analyst and trader you can find at the website www.fibstalker.com. I also post regularly on Twitter, and you can reach me out on Twitter at Fibstalker nickname. Good evening. Today is Monday, December the 17th, 2013, and this is a weekday review for my subscribers. I'm going to post this review on the blog as well. But only for tonight. The markets I'm going to review in this video for you are the euro dollar forex spot, which is what you see on the screen, the SP500 index, E-mini future, and I will expand a little bit on the New Zealand dollar versus the US dollar, which I mentioned yesterday in the newsletter, and I will elaborate a little bit more on that one, as yesterday there was not too much time to delve into it. So let's start from the euro dollar forex. Now on the 11th Wednesday, last Wednesday, I gave you a setup which worked very well on Monday, actually today. Now this is the daily chart. This bar it is forming now. It's tomorrow bar. It's Tuesday's bar, and as anticipated, there was participation in the 137.20. I also know that. Dale Pinkert published today, on the 12th, he showed that video to the online live analysis room at FX Reach. Thank you, Dale, for showing that. And as you can see here, there was participation of 137.20. And that's not a random level. Program trading uses anchors in a certain way when the market is extended, and we could see here that we had this market moving higher for seven sessions, printing higher highs for seven sessions, and this is an indication of an extended market. So we had participation here. We had this move higher, and as I will show you on the 20-day moving, on the 24 minutes chart, the opposing measure move was also failed. So the bears in this market failed, and at this point we have a potential continuation higher. There will be the Fed this week, so this might explain the reason why we got this kind of tail formation here. There was no decision to keep moving the market higher. Now, what we have to observe first of all is that this setup gives us two new targets, 138.54 and 139.20 area. Okay, and this is an extension, so we have the potential to get into the second target here. That said, we will have the Fed, and the Fed is in the way, and what I can anticipate, one of the scenario, I can anticipate different scenarios as usual. I mean, the market could just continue higher and we get participation and then a confirmation the day of the Fed, which would actually bring price right into this second target here. Another possibility could be just a move higher and then a retrace back into this support area and area of participation of longs the day of the Fed announcement, right? So if you got into this trade, congratulations to you. You should be excuse me. You should have now what I call a free risk trade, meaning that if you took half at when the trade reached the first 1 unit of risk, gained 1 unit of risk here, you could actually be now in a position that is risk free. So be very careful in this market. I still anticipate a continuation higher. I have shown here the setup, the first target the the of the measure move and move higher that and set up long that we identified on November the 7th here. And as you can see, this is the actual level of target, and I will take my position out at that target if we get there. So my target will not be 141, although we could get there, but will be 140.80 here, and I will be more than happy with 1300 pips in my swing trade if we get there. If we move below 136.92, which is the level that I gave you last Wednesday, the 11th, then we will need to reevaluate, and maybe we will have a deeper retracement here. But so far I do not anticipate that, and the market is showing us that it wants to keep moving higher. So we will see what happens with the Fed. Moving to the SP500. Before we move to the SP500, I want to show you the 240 minutes here, and show you how the counter trend trade failed here, and the counter trend trade would be would identify program trading on the opposite side, and we got an initial, as you can see, a reaction here at this 137.60 level, which actually tried to push price a little bit lower, and it actually did, but then price eventually broke this 137.72, which means that to me now a retrace and a retest of this 137.20 should be a positive test, should be a test that do not breaks this 136.92 we mentioned before. Moving to the SP500 then, I have the daily here, and if you remember, I told you that this market likes to retrace a lot, and we got exactly what I anticipated in the weekly newsletter this weekend. A retrace into this 1780. Everything happened very quickly here. That's typical. And once market got there, it never went above this 1786. And the 20 period moving average here acted nicely as a resistance. That's not really important. What is important is this level where program trading has been pushing price lower. So at this point, I anticipate a continuation lower. You could still see a move higher here, but as soon as this sequence of measure move on the 15 minutes here fails, then we will see a continuation lower. And as you can see, the first target of this 4-hour setup short of 1780, it's at 1741, so enough close to that 1737 support. Now, what is this 1737 support? You should know, because I've mentioned that now since a few weeks and months, and this level that takes time to to form and be tested. If you don't know what this level is, just go and subscribe my newsletter, and you'll grab the previous 6 newsletters as well, and you can review for free, and you can review actually the significance and meaning of this level. Finally, I want to dedicate a little bit more time to the New Zealand versus US dollar chart here, because yesterday I had to close the video. I don't want to make these videos too long, so I closed the video around 15 minutes, but you will remember that I mentioned this sequence of measure move here on the weekly 06560 area of support, bringing price into 081.41, and then this retrace that did not hold very well at the beginning, but then we had the formation of this consolidation here, and there is a nice way to explain this kind of consolidations using the program trading levels, and I will provide this explanation and give you a key to read all the old traditional technical analysis patterns. There is a way to read and interpret them using framing, using the model I have to frame the program trading. So once we got this consolidation here, this level 076, 077 basically started working here, we started seeing participation on the upside. So this market has still a participation on the upside that we need to keep in mind. This market is not going lower at this stage. In order to go lower, we need to break this 074.30 level. And I just want to show here where the weekly is indicating a target for first target for this market. And as you can see, it's much higher than the current prices, and this is 093.71. But keep in mind, this is the weekly program trading target. It's not the daily or shorter term. And to study the daily, we move to the daily chart here, and then as indicated yesterday in the newsletter, then what we have here, we had a retracement into the next measure move on the daily here, and as you can see, as price got into this 081.13, then we start seeing this move higher. And this move higher, it's not just a random move. What happened here in this move higher is that we got a confirmation of this area of support, and the reason for that is that the opposing sequence of measure move that we can see here quite clearly, with shorts coming in starting at 083.54, and look at where they broke price. Look at how powerful program trading is and how powerful these targets are. Profit taking from shorts position came just at this first target 080.79 here, and then we saw this move higher. Now in the next sequence of this in the next measure move of this sequence, the price should have to continue lower, should have responded at this new level of short 082.40. But as you can see, at the beginning we had a participation on the downside, so which shows the program trading was at these levels. But then eventually price got above this 82, so violating the sequence of measure move lower, and so confirming that this is a support, and this support at 81.13 as a target at 087.44. So please do not short this market at this stage. In order for this market to continue lower on the daily, we have to break the 080.12, but I don't anticipate this at the moment, because the sequence of measure move of this correction lower into the next area of support and participation on the long side of program trading did work quite well, violating the sequence. So be very careful in this market. This market could actually get into 087.44 in the next few weeks. I hope you enjoyed this review, and if you want to receive these videos, please go to my website and subscribe the free newsletter, and you'll get also the previous 6 newsletters when you subscribe. Thank you very much for your attention. I wish you a very good evening and a great trading day tomorrow, and a continuation of the trading week. Bye bye now. See you soon.